Breaking news. Bob Iger is taking over Disney. We're not going to beat that dead horse anymore. We're going to talk about the pops and drops and earnings and Dick's Sporting Goods, also Dollar Tree. We're going to talk about some analyst ratings, some downgrades that are coming to some weak stocks. Holy moly, what a time to be doing that. Zoom, one of them, getting killed again. But the S&Ps are up. The market is up. Can we have a Turkey Day rally? Mitch, let's get the show started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, folks. We are trading at the highs of the pre-market session, up 14 and 15 handles at 39.73. We got some bumps in the road here at 39.94, Friday's high. And then how long have I been talking about 4K? Can we finally clear 4K and hold it with the bid? We got the dollar down 38 cents at 107.35. TLT back over 100 into green by 30 cents. Crude rebounds despite the China lockdowns. That's up $1.26 at 81.29. Gold up 8.90, 17.48.50. Silver up 40.8 cents at 21.28. Bitcoin futures under 16K, but up $65 at 15,755. And Ethereum not cooperating, going the other way. That's down $3 at 1,094. Let's bring in Triple D. Triple D, we talk about this being perhaps the quietest week of the year, and things are still kind of looking that way. What are you seeing from your perspective from the after hours and pre-market trading? And that always, good morning, Money Mitch, to you. I hope you're a little warmer than we are up here in the north.
I definitely am.
It's quiet. It was quiet last night, very quiet last night. A little more fireworks here today. We had obviously some retailers that reported moving the markets around a bit, but overall pretty quiet. This Thanksgiving week is one of the quietest weeks for the market. So I would not be surprised if you see volatility come in. We kind of just hang out. Obviously, we've got some retailers that reported, so we're going to jump into those earnings, those individual reports, but you are seeing more of the same thing. The rips just don't seem to hold. Even with Disney yesterday, we're not going to talk Disney because Joel said we couldn't talk it, but just quickly, it kind of was faded a little bit yesterday, which is a good call by Joel as well. $100, 99, 98, now 97. So pulling back. I hope it goes back to the low 90s because I do want to rebuy this, some of those shares. But
did you like Disney before you had kids?
Yeah, I've always liked to. Who doesn't like Disney? My buddy. Story.
There's a lot of people.
No. You don't like Disney either?
No. Dennis, follow through with what you said. Your buddy, follow through with what you were saying.
So, anyways, my buddy, right after college, and he got a contract with Disney to go work at the Epcot Center, because to work in the different pavilions that they have, you actually have to be Canadian to work in the Canadian pavilion. You have to be Mexican to work in the Mexican pavilion. So he's Canadian. He got the 1-year contract, go down, work there. And I remember I went down and visited him. And, he gets you in for free to the parks, which is kind of fun because they're allowed, I think, 10 free passes a year to visitors. So I went down to visit him. I was like, how do you like it here? He's like, how can you not like working at Disney World? This is the happiest place on earth. And I'm like, it's true. How can you not like
fed it
Disney
to that
World?
guy good.
How can you not like Disney World? It's the happiest place on earth. How can you not like the Disney Channel and the Disney movie and the kids? And I mean, you gotta like Disney. So the answer to your question, the long answer to your question is yes. I have always liked Disney, even before I owned the stock.
Okay. I'm just going on revisionist history here, and you correct me if I'm wrong, but I don't think I've seen you struggle with a long-term position more than you did with Disney. And
Why?
I know you've come out on the good end on it,
I've had the entries have
eventually.
been pretty bad. I've
Yes,
had
and I
some
know
bad
you and
entries.
Spencer. I know you and
Yeah.
Spencer bought stock at like 170, 180. I mean, or 160. I mean, I don't
I don't think
remember
I
for
did. I bought 130, 130, and
maybe
I
it was
bought
Spencer.
120, and then it went to 90. So I did buy 130 originally, which was
Okay,
way too early. And then I
okay.
bought 120, but never found average down. And I bought more at 90 and brought that
I
cost base
know,
all the
I
way down.
know,
And then
I
it went back
know,
up to 120. And I unloaded the 120 and made
I
money on it.
know.
So my exits on Disney have been excellent. My entries have been bad. So that is true. That's good selective perception there, Joel, because usually I'm pretty good on the entry and I'm pretty bad on the exit. I've been bad on the Disney entries, but really good on the exits. So if I could just
I,
combine that, I'd be like this superb trader because I always suck at getting out. But you're right. You're right.
I
And
just
I'm
wanted to
kind of
because
entering
we
this
thought
Disney
about it. We
futures
kind
trade.
of went head to head, yeah, at it yesterday, and then I was thinking about it, and then I said you had kid vision, because I mean, I love Disney too. I mean, come on, my parents took me there a couple times. We
Yeah.
took the kids
The
there a couple
memories.
times. I mean, the Disney movies. First movie we took Dana to was The Lion King, and she's sitting there, and the movie starts, and they flash these these big words, and she looks up and she goes, words, and she just was like carried a Simba doll around forever. I mean, it's a part of everyone's life. The stock is a whole different story. I've owned the
Yeah,
stock over the
stock's a whole different
years.
story.
The stock's a whole different story, but all right, I just wanted to point that out to you because
The stock I
I
like at 90. The stock
okay.
I like at 90. I want to come in, fill the gap, get the double bottom, come to daddy, and we're going. But again, the reason that I only was the half size position on Disney, even though I kind of wanted to add to it, what keeps me still concerned is I still believe we're going into a recession. And if we're going to recession, that park revenue, which is just hopping, 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 might come in a little bit. And that is a scary thought because that's what's been driving and keeping the
Mm-hmm.
price elevated here. So Money Mitch quiet in the background here. And we weren't supposed to talk Disney at all. So you need to bring us back on the rails because in the intro, Joel said he wasn't talking Disney. And now we just talked Disney for 8 minutes. So Money Mitch, you need to save the show.
I was letting you guys go on your Disney, Walt Dream Disney, your dream right there. When you drive through to Disney and there's the big sign and you're going through, the dreams
yeah.
come true, right? Once you
They
get under
do,
the
man.
arch.
Oh yeah.
Well, there you see it there. The battle is on there. We'll see what happens in Disney. Let's go to first, let's start with some Bitcoin talk. Bitcoin hitting 15,480, its lowest level since November 11th, 2020. You got Coin tumbling right now. You got Grayscale saying that they won't share their proof of reserves. You also got Genesis Global Trading mentioning potential bankruptcy if they don't get some fresh capital. Of course, this was kind of more of a lending process there. And it seems to me like, is there anything safe from the FTX disaster?
There's so many unknowns here. The fallout is still to be seen. You mentioned that before, Mitch, here. And Bitcoin was already technically in trouble kind of before the FTX thing started. I mean, we were wrong for a long time on Bitcoin. We've been absolutely right, on the fall down though. So 50,000, I said it was going to 30. When it got to 30, I said it's going to 10. I'm still sticking with 10. That's where I think it's eventually heading. It's not going to be a clean road there. It's going to have some bumps for the shorts, but I do think like we're in this different market here right now where cash flow, cash matters, real things matter. You don't get any of that with Bitcoin. So I'm not interested. Somebody asked me yesterday, would you buy Bitcoin at, a certain price? I don't know if I would buy Bitcoin anywhere. Not unless, we start getting a Fed. Maybe when the Fed pivots and stuff. Maybe, but until we actually see a Fed pivot, I'm out.
What
out
about the
on Bitcoin. Too many
whales,
unknowns.
Dennis? The whales are buying it. The
The
whales.
whales.
Yeah.
The whales that are hoarding
Free
Bitcoin.
Willy?
The hodlers.
Yeah. The
hodling
whales. You
whales.
got to do what the whales do. They do unusual option activity, and then they're the whales. Yeah, you got to get in. The whales are doing it, man. That's what I hear. That's all over the place. the whales are loading up on Bitcoin at 15K.
A lot of people have lost a lot of money on this. Obviously, some people who held from 5 years ago are still doing really well. And, maybe this is a Bitcoin story. I absolutely have said before, if you're in crypto, at least be in Bitcoin. I mean, Sailor was saying that if you're in these altcoins, sell altcoins and move it back into Bitcoin. I think that's one thing we have learned is that all these alternative coins, it seems like 90% of them are snake oil. Maybe there's going to be a couple of winners, but it seems like Bitcoin's the only one that's really kind of held up, and it hasn't even held up that great. So I'm concerned on all the crypto stuff. I don't want to own any of it.
It just not my
Not
final
buying the
thought.
dip on crypto.
My final thought is that crypto, it was supposed to be an ecosystem, okay, where you could rely on people in the blockchain, and you don't need regulation. Regulation is horrible, right? And that's what it was based on. And now they're calling for regulation. I mean,
I don't
to
know if
me,
they're calling for regulation, really.
Pomp says
uh,
there's always been regulation. I don't know if I buy that either, but he said it on CNBC the other day. Did you see him with Scott Wapner, Mitch? Did you watch that interaction?
Oh no, I didn't.
It was
catch that
good.
one. I gotta catch.
It was
that
like
one,
last
but-
week, Pomp versus Scott. Scott was tough on him. Scott was asking tough questions. That Pomp can talk though. Pomp won those arguments. He's got the answer for everything. He's been absolutely wrong in the last year, but he's got the answer for everything. So he can talk it. If you sat in a room with him for 2 hours, I think you could probably turn me around from a bear to a bull. That guy can talk Bitcoin. So,
well, the truth is, some people just don't understand it, and I think that's another
I don't
thing.
understand it.
And that's where I think that people get it wrong, and they just don't understand what we're really focusing on is the technology behind it, not necessarily the value of it making you a big, large sum on your wealth, right? That's not what everyone's focusing on in the crypto environment. And I think that the people that focus on it more as technology are going to be able to really find what they can kind of really find that is actually true value, right? Where is the businesses being built behind this? What is Web3? I think this is a time where some people need to really do their research, because in the long run, I do think crypto wins. It's just going to take a long time.
You
and
think
it's
we're
just
going
like
to be
everything.
transacting in crypto,
Yes.
getting rid of our US dollars?
Yes,
See,
I
Mitch is
really
a believer
do
in
think
that.
so.
I don't buy any of that. I'm completely on the opposite. I think
this
it's all
is why
smoke and mirrors.
This is why I feel this discount that you're going to get in this winter is very important. And I think that it's also an important lesson of maybe going to things when they're on the downturn versus the euphoria that we had, because everybody that was buying Bitcoin on the euphoria up move really woke up and realized that that's not probably the strategy to be getting into crypto. If anything, we should be looking at when it's on the winter moves, on the down waves, so that we're getting it at a good valuation. And of course, getting it when it's in the building phase versus the breakout phase. I feel a lot of people grabbed it in the breakout phase, and now they're stuck with the coin, and now they're kind of left with that kind of bad feeling that they went for something. And really, I mean, you bought at the top, you bought a breakout. That's tough to go ahead and look back and be like, did I buy at a good valuation? You can clearly see you bought on the spike.
Bitcoin is just simply now a NASDAQ stock. It's moving with the no growth. It's moving with the ARKKs. It's probably going to start moving with the Teslas too. If the Fed starts to all of a sudden, if we get inflation, check another data point, the Fed starts to indicate pivot, Bitcoin could get a rally for a bit here. But I think you trade it from a relationship basis, and I think you trade it just with those high growth names. Throw it into the basket. It's one of those now. I don't know when it breaks, because the reason it's one of those, it's all the same type of investors, the people who got caught up in story, the people who ignored valuation, the people who were in the hype, and that's, what all those stories, that's what all those Cathy stocks are. It's all the same stuff. So, I mean, I'm treating just like a NASDAQ stock. If I don't want to buy these high growth names, I don't want to buy Bitcoin either. There's going to be a certain point in time, it's going to be some tradable bottoms in it. We will, and we've obviously called some tradable bottoms in Bitcoin before. Joel's traded it well. I've actually traded it pretty well too. But from an investing standpoint, I don't know what I'm investing in. That's why it's hard for me to just come in here and say, yeah, Bitcoin's 15,000. Eventually it's going to, 500,000, and eventually I'm going to make a lot of money. I don't know that. I don't know what it's worth. I think it's worth something, but like I think a lot of these crypto altcoins are worth nothing. I think Bitcoin is worth something, but I don't know what that is.
Remember, I was one of the people very early on, as soon as we started seeing some platform issues, I started drawing more and more concerns, waving red flags that keeping cryptocurrencies on these platforms was the main risk here. It wasn't being involved in cryptocurrency and having it as an investment. It was keeping it on these platforms. So if there's anything that I definitely learned, it was not to keep it there, right? Why are you keeping it at risk? Keep it in, of course, either that you own it or you have it in a cold wallet or something like that, because that's the way that I feel that you could have got around the situation. And it's just something to learn from. Whenever we're going into high risk assets, newer assets, they're always going to be running into waves. There's going to be breakout waves and there's going to be the down waves. I think that's when you got to remind yourself not to get caught in always those breakouts and looking for discounts.
If you're talking about this from a technological standpoint, I think, and I'm probably going to get a lot of heat for this, but I think it's like, this is the analogy I'm making. Henry Ford created the car and people are driving cars and there are people still using horse and buggies. I mean, the technology has been an epic failure. I mean, people have lost billions of dollars. So I don't know where you could say there's been technical advances in this. And you're buying this for the technology.
What are we using? There's a good question. Joel's bringing up an excellent point.
I think you guys are way off here. I'll just say that right off the bat.
I'm just going to, I want to say, and then you can give your argument.
Like,
I'm going to ask you the question, Mitch, because Joel's bringing up a fantastic point here. What do we use blockchain for? I mean, I've heard for the last 4 years, I'm not joking. I just want to make my rant and then you can go. Yeah. I've heard for the last 4 years how blockchain is going to change how we do everything. For 4 years, that's all I've heard. The nonsense spewed on CNBC for 4 years. Blockchain, 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 blockchain. We love the technology. What are we using it for today? Please tell me, chat. Please tell me how blockchain has revolutionized my life, because I have not seen it at all. So Mitch, give me an example of what, maybe it's behind the scenes. Are we using blockchains when we process my credit card? Are we using blockchains for when I go to the store and buy something?
Every transaction, every single transaction that you are going to be doing in the future will eventually be on the blockchain.
4 years ago, the future was today. We're 4 years into this. Are we using blockchain for anything?
Yes, we are starting to use it for real estate, healthcare,
we're going
different areas.
That's what they said 4
No,
years
we're already
ago.
starting to use it. We're already using it.
I haven't seen it.
It's because you're not in those businesses, Dennis. I would really start looking at maybe some experts in this, and I'm not going to act like I'm an expert.
Those experts lost us all a lot of money. All this stuff is
the platforms, the people that built these platforms, that build these Ponzi type style schemes are the ones that stole the money. It wasn't the asset that stole the money. It was the people leading the blockchain technology. And some of them, yes, they scammed people. This happens whenever you're in kind of a new technology. I mean, I think we can get in this conversation for the whole show, but I don't think that's what the idea here is.
I think this chat's interested in this show, though, because, we talked about NFTs, Joel. Remember the NFTs, and they were going to change everything, and we're all going to be, doing our collectibles.
I think even Webb in the background. I could see. Let's bring on Webb.
Fart? What about that? What did that fart bring? That fart NFT didn't that bring like a couple $100,000?
The Rock. I still want the Rock, the little rock that got like $1 million. But
all of them.
Let's bring in our guest. Our guest, I have a feeling, has some conversation on this.
Bring Webb into this.
Let's bring in Webb. Let's go.
Webb, is Webb already here?
Yeah, Webb's been listening. He's like he's itching like I am. Like he's ready to come into this. Let's go, Webb.
Webb. Web 3, Web 3 Begoli.
Exactly.
Yeah. It was. They named it after me, and I really appreciate what the community has done for me specifically. Thanks for having me on, guys. I love talking crypto, so I'm glad you guys saw me and pulled me in.
Awesome.
Dennis, I'm with you. I can't. Yes, there are research projects that are being used. Things like tracking cabbage, for example. Walmart was using that for a while, from like the farm to the shelves, stuff like that. But as far as applicable, like these are things that have changed your life. Blockchain, I don't think it's there yet.
It's not there yet.
But
agreed.
But what I'm excited about as a CTO, so I have some creds in this world, right?
Sure.
Is the Ethereum blockchain to me is really, really interesting, more so than Bitcoin, because the Ethereum blockchain acts like as if it were a giant computer distributed across the world. The advancements there are about across all the blockchains are about how to get hardware distributed across the world, not owned by a single individual, to process the same program in a trustworthy way. So like one use case that was thought of in the very beginning was like, we could do it for financial transactions, kind of handle a giant spreadsheet of like who owns what and movements between them. But blockchains like Ethereum, and there are others that are like it too, Solana and plenty of others that I can't name. I'm sorry, everyone. That are doing things that are more like, we can actually run programs on this and we can store data on this. And when you can run programs and store data, now you've got a giant worldwide supercomputer. It's not very fast at the moment, but what is unique about it is it can't be turned off. So what you put on it will always be there, and there's always going to be incentive to process it. And of course, the incentive structure to actually compute whatever it is that it's going to compute has to be there. And that's why we do this whole block reward. And that's really kind of also why it has some dollar value. But that's the excitement thing what I'm excited about on the tech. So I've been in Ethereum since 2016. I'm with you, Mitch. Like I'm when it starts skyrocketing, I'm along for the ride, but I'm not buying more. But when it dips down into the bottom, like we had for, 18, 19, even most of 20, perfect opportunity to just grab pennies, or like every week just buy a little bit, because you can do it fractionally. Like,
well, is it the time now too to buy, because we had such a pullback in Ethereum and Bitcoin? Is it the time now to buy? Like, I mean, what do you? Because we're down like 75% in Bitcoin. I don't know what Ethereum's down. It's probably 70% plus too. Feels like a pretty significant pullback here. I mean, I've been talked into Bitcoin before. I'd love to get talked into it again. I like buying the dip. I just don't know what I'm buying.
Right. Well, again, like, and that's because you made up a good point earlier, right? Like, there's no killer app for it yet. Yeah. But it's kind of like in 1999, we all got excited about the internet, but we didn't really have the killer app yet. Amazon was early, but we didn't have, like, what are we going to do with this internet thing, really? And then it busted. But we've got that technology being built. As Joel was talking about, like Henry Ford, carriages versus cars. But I also think this is about the early internet and networking, and we don't know quite what to do with it yet, but we will eventually. And then there's a fundamental purpose behind it. But until then, this is all.
Don't you feel that's gone backwards though? It's kind of gone backwards. I mean, this was supposed to be the alternative to the federal bank. This was supposed to be the alternative to dollars. This was supposed to be a safe place to keep your money. This was the world coming together as one and creating a global currency. And now you
banks and ending the financial system and ending the Federal Reserve. That was like what everybody has sold us on.
Yeah,
none of that has happened.
Right.
Doesn't the Federal Reserve want to make a digital coin?
Isn't the Federal Reserve the cause? It's funny. I'm sorry, I've got this cold going. It's funny and ironic, Webb, that, here is Bitcoin supposed to, take care of that. We don't need the Fed's printing press anymore. And isn't it funny that the reason Bitcoin continues to go down is that the Fed turned off the printing press? I find that very ironic. So, I mean, it's a risk asset now that is totally now tracking with NASDAQ. And I find it very interesting that the Fed turns off the printing press and Bitcoin has gone straight down ever since. It's very ironic. So, I mean, I don't know how it gets to that next step to start, taking care that we don't need a financial system anymore. We have Bitcoin. How does it make that next step?
I think, Bitcoin really came out of a reaction to the 2008 financial crisis, right? That's
sure.
part
For
of,
sure.
of why we had these things. It was trying to, take the power away from the Fed and take it away from Wall Street and all of those things. But it ultimately, it was slow. It was expensive to buy a pizza. It was expensive to buy a coffee with it and that sort of thing, right? Like there were all these things that kind of slowed it down, and eventually it turns into a speculative asset because the narrative starts to turn into digital gold, the scarcity of it, more about the mythos of what it could be. Everything that you're describing became part of the narrative of why you should get into it. But did it actually live up to that? Obviously, there's been experiments. There's the whole Lightning Network, and going down into other countries getting really heavily into it and all those things. But it becomes, as soon as it becomes a speculative asset, then it's going to have a high beta to the S&P eventually. And then of course you get mass adoption by institutions, and that correlation starts coming together even more. And it's totally a risk on asset now. Absolutely.
Yeah, I think a big part of that is what you just mentioned, Webb, is institutionals, the bigger wealth starting to get into crypto. And that's why it moves with the markets now, because it's in their portfolios. It's in the big boys' wealth. And I think that if you had any substantial amount of wealth and you didn't take a piece of this risky asset or into cryptocurrency, you're doing yourself a disservice.
Well,
as an
and I'll take
investor.
the opposite side of that, because everybody has been saying for the last 2 years, 3 years, you got to buy Bitcoin, you got to put some of your wealth in there. And all it did was lose 75%. So I'm sure as hell glad that I didn't take a substantial portion of my wealth and put it in Bitcoin.
But if you bought at 3,000,
results speak for themselves, Mitch. Results haven't been very good.
If you bought at 3,000 or 4,000 on the second wave where it came down and then went up to 60,000, how much did you make there though?
The difference is, I think that was before the masses were in. I think the problem is they relentlessly pumped this thing. They weren't pumping Bitcoin in 2015. They weren't pumping Bitcoin in 2016. They weren't pumping Bitcoin in 2017. They started pumping it when it started going. And now you've got the masses all in there. So everybody's in it that wants to be in it. What's the next driver? If you just said it, Mitch, that the institutions are already in. Well, what's the next driver to take us higher than if the institutions are already in?
One thing that this did is it brought a lot of capital into the projects. Right now, you're seeing a lot of projects actually working to actually build the foundation. And there's a lot of projects out there that have a good amount of money. And instead of right now worrying about prices, about the coins, they're worrying about building and actually creating infrastructure to build out the Web3 space where there's really going to be some utility. This is why the utility word gets thrown around so much in cryptocurrency, because it's not about having a coin. It's about what you can do with that coin that matters. So I think that at this point, yes, it's still early. And I do think that we're in now a secondary down wave, but I think things come in waves a lot of the times. I think a lot of the times we get 3 waves, 3 opportunities to get in a new asset class, and then it goes. And then there's no opportunity for the big pullback after that. I think this is going to be one of the biggest opportunities for investors out there in this lifetime. And in my generation, I definitely want to
scarcity. This is the other thing.
It's not the scarcity, really.
Scarcity. It's so scarce. But you can divide it into like how many, and how many different decimal points. There's, it's the Fed. They could just keep doing splitting. There's no scarcity to it. There's nothing backing it. So whatever, we'll see. I like I said, I had one little run that was back in 2018 when we did the Bitcoin special. I played it from like 7 to 20, and then when I wanted to sign in that day, it hit 21. I wanted to sign into my Coinbase account, and I couldn't get in. I'm like, the next time I sign into my Coinbase account, I'm getting out of this, and I got out of it. Wanted to buy it when it came back to 10. Didn't. Missed that whole run up to 60. When it was at 60, I was like, oh man, I got to start, dollar cost averaging. I really thought I was going to, buy some the whole way down 60, 50, 40, 30, 20. And I just, at this point, I can't, at this point in my life, in my investment cycle, I don't want to invest in nothing. There's other things that I can
There you go.
invest in, and I don't want to invest.
I agree.
In
In your position, Joel, I would probably not be investing in this. In my position, being younger, I would definitely invest in this.
Are you buying it today, Mitch?
I've
Web,
talked
we're going
about
to
my
keep you
level
later because we have been talking. We brought in a guest to talk to the guest, and now we went
Yeah.
into this whole argument here. Webb's staying on with us later. We're going to keep Webb on because Webb is awesome.
Sure.
We're gonna
Yeah,
keep
let's
him
get
on.
to Web. Let's get to Web 3.
But I just want Mitch to answer the question. Are you buying it today?
I've
Okay,
talked
go on,
about
Mitch.
my
Go ahead.
retracement level that I have drawn from a while back, since it's been before the 20,000. So one of the things that I did was early on, I started drawing what was the retracement from the first wave down to the bottom of the kind of where we got that bottoming around 3,000. It was around like 22,000 to about 3,000. It's about an 86% retracement. So if you look at where it was at the top now, I drew that down towards around the 10,000, just slightly below the 10,000 level.
Striking.
So that's where I'm striking. And yes, if it gets to 10,000, I'm in. There's no point in that. I would say that I would not want to be in at that $10,000 level. Of course, I'd be sizing in on the move down.
We'll talk other things with Webb too, but I want to ask Webb the same question. Is there a level here where you're eyeballing Webb on Bitcoin to come in here and start buying more, or Ethereum for that matter?
Yeah, I'm much more of an into Ethereum than I am on Bitcoin, just because of everything I was saying earlier.
That's interesting.
For Ethereum at this level is a level where I was buying back in 2020 for sure. At the moment, I just feel like there's still risks out there. There's talk about Genesis blowing up. There's talk about Grayscale perhaps diluted. Like all of these things are going to put downward pressure. So I'm kind of waiting for us to get past all of these things. And Mitch is right. Like I really think everything that's happening right now is about the exchanges. Every big blow up in Bitcoin's history or crypto's history has been an exchange that has walked away with people's money, like Mt. Gox to be started off with, right? But that has nothing to do with the actual underlying technology of the blockchain, which again, I still say has yet to find its killer app. So I'm kind of waiting for it to wash out, but I do think what we have too, right? In 2016 and 2020, we had the halvenings for Bitcoin when the reward block went in half. And in both cases, we started to get a lot more chatter in news about what does halvening mean, right? In both cases. And as soon as everyone started talking about that, everyone started discovering Bitcoin again in both cases. And then we had a huge run in 16 and 17 and then sell off. And we had a huge run now in 2020, 2021, and now a sell off. So when's the next one? Well, when's the next presidential election, apparently? But it's about like this chatter, and the more and more people get into it, the more the price goes like crazy. And it's the classic euphoria. As soon as the market's in euphoric mode, it's just going to have a blow off top, that sort of thing. So again, until the fundamentals line up as far as that's the reason why I'm buying, outside of that, I'm waiting for just risks that I'm seeing across the market in it to kind of calm down and be like, okay, are we past this? Is the price good? Great. Then I'll start picking up some pennies.
So
Okay,
let's move on from crypto and let's take it to stocks here. And obviously, you can take it into your individual products as well. But I mean, just taking it to look, you want to start overall, like on the S&P. I mean, we've had such a pullback here. Now we've had the subsequent rally here. What are your thoughts going into the end of the year? I mean, we set up for seasonality is okay. We're kind of past earnings, but then we've got the Fed that keeps talking a tough game. What is your setup here going into the end of the year?
It continues to be caution. The technicals that I pay attention to using the market webs look a lot about like volume at price, and those technicals are kind of telling me this year is still kind of, it could go any direction into the end of the year. We have a lot of still global risks going on. The war in Ukraine is not over. We don't quite know what the winter is going to be like with energy prices yet. Obviously, there's still debates over that, but also when it comes to the Fed, right? So from my perspective, I think the Fed is very much focused on payrolls more than anything else. So when you break down this last CPI number, you had into like goods versus services, goods came down. Everybody's happy about that. That caused that wonderful day of greenness straight up. But the services sector, that barely budged. And as far as where the jobs really are, it's the service sector, especially going into the holidays. So I don't, as far as me personally, I just speaking on my own thoughts, I kind of wouldn't be surprised to see 75 again in December. We have another CPI print just before they release, the day before they come out with it. So obviously that'll be all eyes on that. But I definitely think that when the market went up that day off that CPI print, I thought it was premature. Just way too far ahead of the next rate announcement anyway. But I definitely think the breakdown, we're just not seeing payroll start to decline. Yes, we're seeing a lot of layoffs in the tech sector, and I personally am very sad about that because that's kind of my sector. But even then, the number of layoffs there are not taking a big bite out of the new jobs and payrolls, monthly, weekly, etc. So yeah, I think I don't see us getting a really big conviction rally into the end of the year. We could see something if we just have low volumes and low activity across the market. We might see a bit of, like, I think the market would probably drift up if nothing else was really putting pressure on it, just lightly. But I think if there is volume in it and people are taking actions, I think that action is more likely to be on the downside.
Joel, you're muted.
Well, let's get to your product here, MarketReader. You and Evan Schnidman have been working diligently on this project to bring information to traders and investors. Why don't you talk about? I know you wanted to perhaps talk about DraftKings or the XLE or the USO, but talk about your market intelligent products that explains price movement in real time.
That's right. Thanks very much. And thanks for having me on, guys. This has already been a ton of fun. So I hope you have me on again. So at MarketReader, what we're trying to do is build a market intelligence project that really focuses on telling you what is happening in the market and why it's happening. We're not aiming to tell you what to go buy and sell. We want this to be a tool in your workflow. We want this to help you understand what's happening in the market. And I think that speaks to across all levels of traders, from active retail traders like a lot of your audience here, to even professional traders, and even those who are kind of passive and are just like, I want to know what's going on in my 401k. And I want to be aware of it, and I want to feel a bit more engaged with my investments. So what we're doing at MarketReader is, right now we're watching everything at very high frequency. So we're looking at 10-minute frequency and identifying when things are moving unusually. So right now we're watching 11,000 US equities in real time. We're going to expand that. We're going to add asset classes. We will probably add crypto next, but we are also going to expand into like commodities and fixed income and FX, et cetera, and even options. So we want to identify what's moving in real time, but then we want to explain it. And those explanations might be headlines, they might be people on Twitter talking, but they also can be other things that are happening in the market contextually. Is the market up to date? Did a CPI print come out and we're just off to the races? Or is something going on with the sector and everything in the sector is moving? Or, is there some kind of pair? The last time I was on, you shared a little video of Carvana and CarMax, how we identified that Carvana was moving pre-market, but there was no news or anything, but we identified that CarMax had earnings and it was selling off. So we connected the two. So again, if the only thing in your portfolio is Carvana, I hope not, but if that were the case, you would be aware of what's moving it this morning, that sort of thing. So that's really our goal, and we feel like we've been doing a lot of that. Our first product, go to our website marketreader.com, and you'll find out a lot more details about it. Our first product will be kind of geared at enterprise, where we're sending these signals to brokerages and platforms, so that it's there. But we are also going to be building a platform that individual active retail users can use, as well as any individual who wants to know more about what's going on across the market and kind of dive in and do their own analysis as well. So that platform, we're going to hopefully go live with that early next year, and we are taking signups. So I would love to do just a quick demo if I can.
Yeah, that's what we want to see here.
Take
what
control.
DraftKings,
Right.
DraftKings, USO, XLE.
Yeah.
Teach us something.
Let me see if I can. There we go. This looks like it.
Boom. Let me know when you're ready, Webb, and then I'll put it up.
Okay. Oh, wonderful. Okay. Yeah, go ahead and bring this up on. So what we're seeing here is this is super just a prototype. This is not really what the platform is going to look like. I just threw this together to kind of give us a sense as we do research about like what our system is seeing across the market and what kind of signals we're surfacing. So in this case, yesterday I got a signal about DraftKings as soon as it happened. So we quickly had a sell off in DraftKings. And it highlighted the headlines that DraftKings had a hack, and it was down 8%. In the next 10 minutes, our system also identified that the whole sector, that's the casino and gaming sector, was also moving. So you see in purple there that a sector move. And then, of course, more headlines about DraftKings there. So what we're aiming to do is, A, tell you, hey, DraftKings is moving. And then B, hey, it's moving because there was this
cool,
right?
Is it industry or sector, Webb? Just because I'm that type of person.
Oh, for sure. So we use the sector. So in this case, along the top, you can see consumer discretionary, casinos and gaming.
Okay.
We will go down and look at the casinos and gaming sector. So it's really focused, and we're looking at every stock that comprises that. And then we're watching the sector itself to see, is that sector moving? Is there unusual volume in that sector? How is the sector performing versus the overall market right now versus its historical relationship? All these things to tell us, like, is this a sector move or not? There's XLE I wanted to bring up. So yesterday here again we have a sector move. So we have a large up move in the sector. This was actually the first bar here. So this was at 9:10 a.m. to 9:20 a.m. Eastern time yesterday. We had a sell-off in XLE. And our system picked up that the oil and gas sector was also moving, and we were picking up headlines about Saudi OPEC considering production increase. So obviously an increase in oil production will be a bit bearish for oil as a whole. So for the rest of the day, oil went down until about noon. The headlines came up that they were going to keep things as they are, and so suddenly oil popped back up. So that's basically kind of what we're doing. So if we look at, let me just kind of see what else is going on.
Does it it tracks? You just said 9:10 to 9:20, so it's going 24/7, right?
That's right. Okay. That's right. With the equities and the stocks themselves, it's like 4 a.m. to 8 p.m. But Interactive Brokers and TD Ameritrade both have ETFs that are trading 24 hours now. So we're going to be adding that stuff and tracking that. Obviously, we want to add the futures, the index futures, and stuff like that in the future. But we're going to expand into all that for sure.
What level of knowledge do you need to make use of this product?
The aim is very little. The aim is we want to provide you the context of what's going on. My goal is the more you use our tool and see these explanations as far as what's moving and why, the more you're going to gain that knowledge. You're going to have a better understanding of what the market reacts to, right? And how the market reacts to things. So just kind of as a process of just reading our outputs, I think you will gain a better market understanding.
I think this is an important tool to use. I love this. I definitely always am calling out that if it's a stock move, or is it more of an industry sector move? And I think that's so important to point out. I like how you guys are using different colors there to stand that out for the traders, so that they don't even need to look. They'll already be able to just see it. Does it on the coloring? Would it determine it on the close of the coloring?
Yes. So right now at this frequency, we're waiting for the bar to close because we don't want to have false flags. We don't want to send out a signal that ultimately it's like, oh, actually, never mind. It's not really reacting to it. There are other metrics, obviously, that we can key in on, volume, range, etc. That as soon as there's a lot of volume, there will always be a lot of volume and start providing answers faster. But right now, it's as soon as the 10-minute bar closes, we provide answers as far as what just happened and why, which is pretty good for that high frequency. But we're going to also zoom out because a lot of people, I think you guys have talked about this before, you're not trading at a 10-minute frequency or intraday, you're trading at like more of a daily frequency. So we're going to be working on zooming out and providing you, like, for this day, this is what was important, this is what was going on in that stock that day. So you can kind of see a history and really get a sense of recent what is moving this stock around now? Like what's the narrative that's really big in this stock?
Webb Begoli, founder and CTO of MarketReader, teaming up with Evan Schnidman to bring you a new product. Let me know where to send the invoice to for the 30 minutes on pre-market prep. Web3 Begoli. Hey, thank you. Thanks for participating in our debate, and we'll get you back on again soon.
Awesome. Pleasure, guys. Thanks very much.
All right. Thank you. What just client? It's just so quiet out there, Dennis. I mean, come on, shake things up, man. Do something out there.
We tried.
We've got, and we can't talk crypto anymore because the chat's getting upset. So we got to take it into stocks. And I mean, we can start with what was working again yesterday is what has continued to work. Stocks making new highs, Merck. Stocks making new highs. You know, you look at Biogen looking to break out here. You look at the drug stocks. You look at the banks holding up very well yesterday. And the market sell-off we had yesterday, the banks were not really going down. They were holding up. What was leading the charge on the downside? Tesla, once again, down 13 points. There is complete rotation that continues to happen from high PE to low PE. That continues to work. That trade continues to work. Energy came off a bit yesterday. What happens overnight? They come back and they buy these stocks again. I mean, why? Because they have low PEs. That is what is working. That is what money managers want right now. They're moving away from the stories. They're moving away from the high PE. They might be doing it wrong, but the flow is telling us right now they're still doing it. So I don't know what changes that. I mean, we should talk Tesla because, I mean, a new 52-week low again yesterday. It's bouncing back a little bit here this morning. I don't know if there's a headline or it's just a little bit of a bounce because it's been down so much. But at one point, I think it was down 14 points yesterday. I mean, this has been an ugly, ugly, ugly run for Tesla here.
Yeah, don't expect it to change much. The only thing that I see on the calendar that could maybe bring Tesla up is in December. They will have a semi-truck event where they deliver a semi-truck to Pepsi. That's the only catalyst that I could see maybe turning around this type of chart. Joel, you want to give quick technicals? And then
I mean, this is, I mean, you've seen, I mean, the day that, I mean, let's just go back to since the Twitter deal. When it came official, that stock was at 228.58. I mean, holy mackerel. I mean, that's quite the haircut. 4 down days in a row. I mean, Tesla maybe give you a couple lows in the same area. There's nothing here on the monthlies. I'm not going to drill down on the weeklies or the dailies. Let's see what happens at yesterday's low, 167.54. If that's protected today, maybe makes a higher low. I mean, maybe if you're trying to pick this up at the close, 67.87, and then, you know, give yourself a little room under yesterday's low. But let's make a higher low today and turn up. Next target, really the only target on the upside would be 176.77. That was yesterday's high, but just a slow, the volume picked up. The volume picked up yesterday, so perhaps you just got someone that was squirming, you know, finished selling their position, but just not a good chart. And the other thing that keeps in the back of my mind is Dennis said there's really been no bad, there hasn't been like bad news. This has just been a market valuation sell-off.
Well, again,
yeah.
And they don't like what he's doing with Twitter, I feel. But let's keep going. Let's go to Zoom.
Oh, Twitter.
Zoom.
I'm so glad that's not around anymore. Anyways, go ahead.
Yeah, if it was public, it would be annoying right now. But Q3 EPS at $1.07, beating the 84-cent estimate. Sales at 1.1 billion, beat the 1.1 billion estimate. Seems like they beat it there by a couple million. They did lower Q4 23 revenue and lowered full year 23 revenue. So in my eyes, I feel like you got to go on Zoom, but what do you guys think?
It's been a value trap. I mean, you know, people were saying, oh, the PE is 20 when the thing was 120, and, you know, the PE is still 20 and the thing was 80, and now it's 74. I mean, these earnings aren't just, you know, not growing. They're not going really up hardly at all, and then potentially maybe start going to go down. So, I mean, this has been a value trap. They're a one-trick pony. They absolutely need to figure something else out, or the stock continues to go lower. The Kathy Darling, again, not having any luster whatsoever. 70 is huge support.
All right, let's keep it moving.
Pre-market low. Yeah, pre-market low, 72.20. You bounced a little bit off that. Low the move. 70.92. Low close of the move 71.84. So I use those as light parameters on the on the downside if you're looking to cover short or attempt a long. For a gap fill on this one, the top of yesterday's range, actually two lows at 80. So that's going to be your resistance moving forward.
Best Buy Q3 EPS at $1.38 beats the $1.03 estimate. Sales at $10.59 billion beat the $10.31 billion estimate. Best Buy sees full year 23 comparable sales down 10%. They did resume repurchase in November after pausing in Q2 and now expect to spend approximately $1 billion in share repurchase this year.
Buy the rep just has not worked. It didn't work with Disney yesterday. It didn't work with multiple other stocks here overnight. Like Dell had earnings, ripped on the original report, and then they come out later on with the guidance cut. I mean, I don't know. I'm not buying anything up 8% because it just seems like sell. It seems like sell the rip just continues to work. So I'm definitely not buying the rep. Got big resistance up at that 77.48 high from a few days ago. I think this, I think if you're in it overnight, I think I'd ring the register.
We talked about this one yesterday and going through 74 and going through 74. Well, that's history. So maybe I'd wait for it to come back down to 74 as support. If you're looking for more on the upside, need to take out the 77.51. That's real close to that high the other day. At 77.48. So good resistance up there if the rally continues.
All right, let's do Dick's Sporting Goods. Dick's Sporting Goods Q3 EPS at $2.60 beat the $2.19 estimate. Sales at $2.96 billion beat the $2.68 billion estimate. They did raise full year 22 adjusted EPS guidance.
Lower multiple obviously benefited from the lockdowns. We know that, but that trades over that reopening versus lockdown. It's a stock that people kind of wanted to have. I'm torn on this one, Joel. I'm really torn on this one. I'm going to sit on the fence, I think. Tough
yeah,
stock.
I told you I had real good service in there last week, so I upgraded it yesterday, tongue in cheek. 1477 was a daily high. Oh, you just missed that, I think, in the pre-market. This is a tough chart. Maybe try and get it unchanged and then give a little risk under the gap area. That's really the only thing I can give you. A pair of lows at 105.28. Tough chart though. Gapped up and now you're gapping up. Well, not really a gap up, but 109.47 2-day high. Use that as a potential target.
All right, let's go to the next one here. Dollar Tree. Dollar Tree Q3 EPS at $1.20 beat the $1.18 estimate. Sales at $6.94 billion beat the $6.84 billion estimate. They raised full year 22 revenue guidance. They did kind of lower their Q4 net sales. So it was a little bit of a mixed bag there on their guidance.
All about 160 to me.
Yeah.
Holding 160 pair of lows there. That really can't give you anything.
The dollar
else.
stores usually get bottom pullbacks, but sometimes they have some wicked. I'd wait a couple days because last time in August when it missed, it went down for 3 days before stabilizing and eventually did come back. But I think he eventually comes back, but I'd let the dust settle on this one. What about Burlington? Talk about this one. This one's interesting.
Go to Burlington stores here. Their numbers, EPS Q3 at 43 cents misses the 52-cent estimate. Sales at 2.04 billion missed the 2.06 billion estimate. They do see full year 22 comparable store sales down 14 to 15% and adjusted EPS at $3.77 to $4.07.
I don't even know what to say. This quarter is an epic disaster. I mean, from just looking at the numbers out of the pro here, not, giving it, this is 15 seconds of analysis, but I was like, maybe there's devils in the details and there's some good stuff being said, but you're talking about decline in store sales. You're talking about, earnings, seem to be lower than, where the street was, yet the stock is up 7% today. I mean, I'm lost for words on this. I don't understand.
Still the love from the Ross and the TJX reports?
Yeah, but this one should have had higher expectations because of that. If you would have gave me these numbers and said, "Where's the stock?" I'd say it's down $20, and it's up 11. So I have no idea. Anybody who had inside information on this one, liable getting their butt kicked here because this thing's going straight up. So it did get hit on the initial numbers, which I thought, well, actually didn't. I guess it's been straight up since. So I don't know. There must be something else happening here. Maybe it's in the details of the report that we're not seeing here, but this makes no sense to me whatsoever.
Yeah, no, not much sense there. It could be a fake out. We'll have to wait and see. No one
I'm
knows.
not
really.
buying it. I don't know.
Yeah,
Earnings
170.
look terrible.
Yeah, you got up there in the 170. Just touch that in the pre-market. Then what do you know? Your 2-day high is right there too at 169.79. So if in fact they could, they're going to have to sweep the book and take out all the sellers to open it, at or near 170. This one I would look. Let's say they get really excited, they take it through 170, and you think this is a moonshot. Take a look at the pair of highs at 173.30 and 90. We'll just call that 173.50. That'd be another target. On this one, if they do get that, this would be one of those trades where they open it 170, they go 170 and a half, 171, 172. And then all of a sudden a whale comes in and comes back down through that opening price. I wouldn't want to be long with with anybody's money. Big gap to fill on the downside. So just keep an eye on those resistance levels and see how it trades off the open. Yeah, I'm looking at the numbers here, and
They don't
a
look
double miss from.
That's
It's
how
like
it
a
is
figure of
sometimes.
Wall Street.
If you try to put logic in the market, sometimes
logic
you are,
doesn't work.
Yeah, you
Comparing
gotta
stores down.
throw it out the window. You know what I mean?
Good
We'll
thing
have
they
to-
didn't beat.
Price tells the story. That's another thing too, and I'll be paying attention. We'll see what happens there. Let's go to Canadian Solar. Let's sneak one last one in here before we get Joel out of here. Canadian Solar is one that we've been watching for a move above 35. Finally made that move, sticking a little bit above, but the earnings weren't the best. Q3 EPS at $1.12 beat the 49-cent estimate. Sales at 1.93 billion, missed the 2.07 billion estimate. Where I don't like it is the Q4 revenue of 1.8 billion to 1.9 billion versus the 2.11 billion estimate.
I'm long it still. I sold half of it, bought it when Craig Johnson came on our show and liked it, and I kind of was like, I kind of like that too, and then went straight down after that. Everybody gets calls wrong. That one wasn't right. So I don't know. It's come basically almost back to where I bought it here. I kind of want to have some solar in my portfolio. First Solar obviously has been just an unbelievable performer. Been the best of breed in the last little while for sure. And PH looks sleepy. It looks like it eventually wants to break out again. The tan has come back nicely here. CSIQ has come back off the lows here too, but there's massive resistance up here at 40. I don't know what to do with this one.
This is a tough one. It did sneak over 38 in the pre-market, and I do see a high just above 38, another pair of highs at 38, just above it. So if the bulls want to take control of this thing, get this thing 38 bid, take out those highs at 38 and a quarter, and work your way back up, towards 39 or 40. Coming back on the downside here, if you do get a big seller coming in, or a seller, you have a trio of highs right there at 37. Old resistance, new support. So I'd like the 37 support better than trying to pick resistance. And Dennis, do you still have that project going on? Your solar project?
Yeah, I still have my solar project. Yeah, it's been like 7 or 8 years into it. I was in Ontario, and if you don't know the story there, my dad's warehouse, we put solar panels on, and they were paying 80 cents a kilowatt. It's just slow. It just keeps paying, and every single month it just we're selling the power back into the grid is what it is. So it's actually been a fantastic long-term investment. It's been doing it gives me about 16% return a year.
What?
And it hasn't.
You got any more roof? Any more roof?
I know.
Space?
I tried to get bigger. They didn't give out. So what happened was they had the contracts, and then everybody wanted to get in, and then they started limiting the contracts, and you couldn't get the contracts, and then people were buying the contracts and trying to get in there, and then they just can't. The new government came in and canned all these. They canned the program. They couldn't get out of the existing contract because we signed a 20-year contract with the government to sell the power back into the grid. I'm in like year 8 or year 9. after the
Wow.
20 years, and the solar panels just turn over and then they can power the building. But it's been an unbelievable return there. That solar project was awesome. I wish I had all my money in that solar project.
Man, I was about to take some roof space there.
I know.
When I hear
It was a good
returns,
one.
you
So it's
get me excited
16.5%
there.
the last 9 years. It's been just an excellent project. So.
And you did the work yourself on it, right? You're up there putting it. Did you do some
The
of the
steel
work? You
roof?
gotta, yeah.
Yeah, me
Get
and my dad were up there back in the
eh,
day. My dad, roofer for a long time, owned roofing company, and obviously,
Hey.
yeah, we were doing the steel roof and
I don't know if
putting it
you'd
up
be
there. I
doing
didn't
that
install
now.
solar panels. I don't know anything about installing solar panels, but you don't want to put the solar on like a shingled roof because obviously the shingles then need replacing. I take the solar off to replace it, so that's why I put it on a steel roof. So we had to put the steel roof on, and then we put the solar on. So yeah, we did a little bit of work. That's been a great project. Wish I had more of that.
All right, we're just itching up here, continuing to make new highs on the session. I guess from a textbook, we had a big move up off that CPI number, and you're getting consolidation here. So trend to continue. I'm looking maybe for, it's not that far from here, but 39.94 was your high on Friday. So that's a target on the upside. And I've been preaching getting back over 4,000 and closing over 4,000. I don't know if this is going to be the day to do it, but at least we're getting a running start. So I'll let you guys go. Mitch, I hope we weren't too hard on you today. We like to, we like to
Oh, I enjoyed it.
give you a
I
hard
enjoyed it.
time. I
It's a
see you
good
kind of get,
conversation. I mean, there's
yeah.
eventually going to be a significant rally in crypto from some point. I don't know where that is. Things go up, things go down, and I you don't know. So I mean, it's a good conversation. I like to hear both sides.
I'll tell
All
you
right.
what. I'll let Joel get on out of here, and I got one last thing to show up on Bitcoin. But Joel,
Okay, sure.
All
have a
right,
great
Triple
one.
D, I'll check in with you at the top of the hour. Everyone have a good day.
All right. So the way that I looked at it, and what I'm going to show you guys is the retracement levels and why I have that target, right? And so here you guys see it. Going to go ahead and just hit shift here so I can measure it. All right. Let me just hit the ruler. Boom. Want to show you guys this, and the reason why I'm doing this kind of experiment is just to kind of show you guys what the retracement was on the first wave. That was 83.23%. From that top of that wave to the bottom of that wave there, right? That's 83%, right? And so we can take that outlook and then just put it up here from the top to see what we're going to get to on the next move. And so that's what I tried to take a look at.
Another
and so if you
83%
draw it,
drop. Where does it bring you?
Exactly. 83% drops brings you right around here, around the 10,000, 11,000 spot. If you see here,
Well, that's my target, so that's good.
11,000, 10,000, it's right in that retracement. It almost would make sense for it to retrace that much. And so in my eyes, I'm looking for a full 100% retracement of the recent rally. You could see it rallied from around that 10,011 spot, and it makes sense on the retracement from the last wave. And so that's why I'm looking at those levels. We'll just have to wait and see if it can get down to those levels.
I think it makes sense to wait for this fallout because we still don't know the fallout from the FTX. We don't know now. GBDC is to say they don't know what's going on there. I mean, there's a fallout happening here. I think, and Webb mentioned the same thing. I think you did as well, Mitch. I think we just need to, if you're a big crypto bull, you want to get into this stuff. I'm not saying I'm in that camp, but I think it pays to wait till this FTX fallout is over because we don't know. Obviously when you get a major player in an industry, there's a potential fallout that obviously is more contagion. We know some very sophisticated investors lost a lot of money here with FTX. So I think waiting here is prudent, just my opinion.
Well, that's all I wanted to do is show you guys my explanation of what I see. And that's all Dennis can do too. And that's one thing that we will always do for you guys right here on Pre-Market Prep is be transparent about our opinions, what we see. We might not be right all the time. And most of the time, we try to be on the right side of the coin. But the truth is we don't know. And what we try to do here is give you guys informational purposes, of course, so that you guys can learn from the way that we approach the markets. How did I approach that? Retracement in Bitcoin. That's why I've been looking at this level for a while now versus, when this is coming down, feeling the panic. I'm not feeling panic. I'm like, come down to me because I'm ready to buy you. And I think that's the approach that we can always learn from our kind of strategy, our processing that we try to take So I appreciate you, like always, Dennis, talking about your process and what you see in the markets. And go do what you do best, my friend. Go trade.
See you, Mitch. See you, everyone.
Have a good one, Dennis. We're going to get you guys now over to live trading action. That's where we do some live trading with Lord Ryan, Zunaid, and of course, as we join you guys on live trading. We're going to have a good show. And then, of course, we'll do a little education and then bring you to stock market movers later today. No Benzinga live this week, as of course, AB is out. So we will go ahead and try to get you guys some great live trading content. Then, of course, stock market movers, we get through the headlines and expert opinions. Going to have 2 interviews on the stock market movers. Don't miss that. That's going to be at 1 p.m. Eastern. Let's get you guys over to the live trading action. And of course, hit the like button down below. And if you guys haven't heard about our crypto event, because we did talk a lot about crypto today, I would definitely do a disservice in not telling you guys about the future of crypto. You guys can check out our event, of course, in New York City, December 7th. Don't miss it. I want you guys to go ahead and check out the Future of Crypto event. I'm going to even give you guys a discount to the event if you guys want to go check it out. It's going to be in New York City. Don't miss it, team. Here's going to be the link here that you want to go ahead and click. And of course, the discount code that I'll give you guys is MoneyMitch20. Get your 20% off right now. And we'll see what happens, of course, in the future of crypto. And there's a big reason why I think this is your final chance, the opportunity to learn about the business, learn about what's going on here. If you have questions about the cryptocurrency space, well, this is going to be the place to go ahead and ask. We'll have time to network with some of the leaders in the space. So come out here to the Future of Crypto event and check it out. Benzinga right here. Don't want to go anywhere.